You know, on the surface, commerce feels incredibly simple.
Hmm.
You want something, you see a price, you click a button and you buy it. It feels, I don't know, almost like a handshake.
Right. And if you're selling lemonade on a street corner or, a used couch on some app, it is just a handshake. It's immediate.
Exactly. But we aren't talking about lemonade stands today, are we? We are looking at the other end of the spectrum.
The far, far other end.
When a multinational corporation sells, say, jet engines or pharmaceuticals or thousands of laptops to a government, that handshake becomes a data problem of massive proportions.
It stops being just a transaction and it starts being a process. A very long, very complicated process.
And that entire process is managed by what is, I think, arguably the central nervous system of global trade,
Yeah.
SAP SD,
Sales and distribution, yeah.
sales and distribution.
Which is a bit of a deceptive name, honestly. Sales and distribution makes it sound like it's just about printing invoices and loading trucks. But when you dig into the source material we have today, which is basically a comprehensive index of the module's logic, you realize it's actually a control system.
A control system, how so?
It's the logic that dictates if you can sell, who owns the product while it's on a truck, and how the money finds its way to the right line on a balance sheet.
So that's our mission for this deep dive.
Yeah.
We are going to try and decode that logic.
Yep.
We aren't just reading a manual here. We're trying to understand the why behind the software. We'll look at the organizational maps, the pricing engines, complex logistics, and even how companies actually install this beast. Basically, how does this software manage the chaos of the real world?
And we should probably start where any SAP project starts, with the hierarchy, the map.
The organizational structure. Now, looking at the documentation, it seems incredibly rigid. It feels very military.
It has to be rigid.
Why is that?
If you don't have a rigid structure, you can't report on anything. At the very top, you have the company code.
Which is essentially the legal entity.
Right, a wallet. It's the wallet. It's the independent accounting unit. If you're a global conglomerate, your U.S. operations and your German operations are likely different company codes.
Because of taxes and currency.
Exactly. They have to file taxes in different countries, they use different currencies, and they produce their own balance sheet and P&L statements.
Okay, so the company code handles the money, but who handles the actual selling?
That's the sales organization. Legally, this is the entity responsible for product liability and customer interaction. If a customer sues because a product was defective, they're suing the sales org.
But a sales org doesn't just sell everything to everyone in the same way. This is where the hierarchy gets interesting to me.
Right, because it doesn't operate in a vacuum. It needs a distribution channel.
This was a key distinction in the notes.
Okay.
The channel is how the goods get to the customer. Wholesale versus retail, that kind of thing.
Mm-hmm.
Why does the software need to distinguish that so strictly?
It's all about pricing and strategy. Think about it. If I sell you a pallet of sodas as a wholesaler, I'm giving you a bulk rate. If I sell you one single soda as a retailer, you pay full price. The distribution channel tells the system which rulebook to open. It separates the business logic.
And then the third piece is the division.
Mm-hmm.
So product line electronics versus, say, mechanics.
Right. And when you bolt those three things together, sales org, distribution channel, and division, you get the most critical concept in the entire module.
The sales area.
The sales area.
It's almost like a coordinate system for the business.
It is. It's a distinct slice of the business.
Mhm.
You literally cannot process an order in SAP without defining the sales area. It acts as a firewall.
A firewall.
Yeah, it prevents you from accidentally selling a high-tech medical device using the pricing rules and legal terms of a consumer toaster.
That makes perfect sense. So we have the conceptual map, the sales area,
Yeah.
but the sources also mentioned physical locations.
The plant and the shipping point.
The plan is obvious, that's the factory or the warehouse,
Right.
but the shipping point seems very, very specific.
Oh, it is. A shipping point is the physical location where goods leave the building. It could be loading dock A for trucks or rail depot B for trains.
And the system decides that.
It determines it automatically. It knows, okay, this is a refrigerated order, so it has to go out of the shipping point with the cold storage loading ramp.
Wow. It's amazing how much physical reality is hard-coded into the digital system.
Mm-hmm.
So we have the map, now we need the players, the master data.
Which brings us to the customer master.
And again, in the real world, a customer is just a customer, right? It's Dave,
Yeah.
or it's Acme Corp. But the source material highlights that customer is a loaded term in SAP.
It's not just a name and an address.
No, it's segmented.
Correct. It's split into three specific views. You have general data, name, address, phone number. That applies everywhere.
Right.
Then you have company code data. That's the finance stuff. And finally, sales area data, which dictates shipping conditions, currency for that specific slice of the business we just talked about.
So I could be a customer for the electronics division with one set of shipping rules and a customer for mechanics with totally different rules, even though I'm the same company.
Exactly. But the part that usually trips people up, and I think this is a key insight for anyone trying to understand B2B complexity, is the concept of partner functions.
Okay, yeah, this was the aha moment for me in the reading, because I always think of a customer as one person, one entity. But in SAP SD, a customer is actually a collection of roles.
It's all about granularity. In a B2B scenario, the customer is just too vague. So SAP splits it into four main mandatory functions: the sold to party, the shipped to party, the payer, and the billed to party.
Okay, let's unpack this. I found this really clarifies how corporate buying actually works.
Think about a franchise. Let's say you run a local branch of a fast food chain. You realize you're out of napkins. You place the order. You are the sold to party.
Okay, I initiated it.
Yeah.
And I want the napkins delivered to my specific store.
So your store address is the ship to party. That's where the truck goes.
But I'm not writing the check. Corporate headquarters handles all the finances.
Exactly. So headquarters is the payer. They're the ones actually wiring the funds.
So then what's the bill to party?
That's who gets the invoice paperwork to process. It might be the payer, but it could also be a third-party accounting firm, for example.
So the system can track all four of those as separate entities for just one order.
Yes. And that flexibility is absolutely crucial for global trade. You might have a payer in Switzerland paying for goods shipped to a ship-to in Brazil, ordered by a sold-to in the U.S.
Wow.
If you couldn't split those roles, you just couldn't do business.
That is incredible. Okay, so we have the map, we have the players. Now let's talk about the action, the order-to-cash process, the heartbeat of the system.
Right. This is the standard life cycle, and it usually starts before the sale with pre-sales, an inquiry and a quotation.
An inquiry is just asking, do you have this? Basically, right?
No obligation, none at all. But a quotation, QT, that's a legal offer. If I send you a quote in SAP, I am legally binding the company to give you that price for a specific date range.
And if they say yes, we get the standard order, or
This is the contract. And this is what triggers the transfer of requirement.
transfer of requirement. That sounds very bureaucratic.
It sounds it, but it's actually the most critical link in the whole chain. It's the sales department yelling over the wall to the factory, "Hey, we sold 500 units, make sure you have them ready."
So it's the signal to manufacturing.
It tells material requirement planning MRP that stock is needed.
Okay, so the factory makes it, then comes delivery. But looking at the notes, delivery in SAP isn't just driving the truck.
No. The delivery document controls the logistics. It manages picking the items from the shelf, packing them, and the crucial step, the goods issue.
What exactly is the goods issue?
That is the point of no return. When you post goods issue, inventory is deducted from the system, the value is removed from your balance sheet, and the cost of goods sold is recorded. Ownership has transferred.
And only then can we do the final step, billing.
Right. You can't invoice what you haven't shipped.
Now that's the standard flow, but the source material details some variations that are really clever, like consignment.
Consignment. Yeah, it's fascinating because it breaks that standard rule of shipment equals ownership.
So the way I understand it from the notes is, we send stock to the customer, it sits in their warehouse, but we still own it.
Correct. It's a massive benefit for the customer. They have the goods on hand, instantly available, but they don't tie up their capital paying for them until they actually use them.
But the tracking headache that must create for the seller.
Oh, it's massive. And the system has to perform this four-step dance. First, fill up. We move stock to their site. Still ours, no money changes hands.
Okay. Then what?
Then issue. The customer actually uses the stock, now we bill them. If they don't use it, step 3 is return, and step 4 is pick up, where we physically go get it.
So the software have to maintain this separate mental bucket for stock that is physically over there but financially still here.
It just shows you how much accounting really drives logistics at the end of the day.
Speaking of accounting and numbers,
Yeah.
let's talk about the brain of the operation, pricing. The sources call it the condition technique.
Yes. And this is often the most complex part of any SAP implementation.
Why? Why can't we just have a price list? Why do we need a whole technique?
Because in B2B, there is no such thing as the price.
What do you mean?
The price depends on everything. Who is the customer? What day is it? Did they buy 100 or 1,000? Is there a contract? Is it snowing?
So how does the system figure out the one true price out of all those variables?
It uses a search strategy called the access sequence. Imagine a high-speed search engine inside the order. It starts with the most specific question. Is there a special price for customer A for material B?
And if it finds one?
Boom, use it, stop searching. But if not, it goes to the next level. Is there a price for customer group retail? If no, is there a general list price for everyone?
So it drills down from specific to general until it hits a match.
Exactly. And once it finds that base price, usually code PR000, it starts looking for other elements. It stacks them like Lego blocks. It looks for K007 for discounts, KF number for freight surcharges, MWST for taxes.
The sources also mention something called exclusion groups. This sounds like a way to stop customers from getting too good of a deal.
It is exactly that. It's the automated referee. Let's say you have a summer sale discount of 10% and a loyal customer discount of 5%. Can the customer claim both?
I would want to.
Of course, but the business might go broke. So exclusion groups tell the system, compare these two discounts and only pick the best one for the customer or for the company. It prevents discounts from stacking illegitimately.
Smart. It prevents margin leakage without a salesperson having to do the math.
Precisely. When you're processing thousands of orders an hour, you can't have a human checking every discount code.
So we have the price.
Yeah.
Now the customer asks the most important question. When will I get it? This brings us to logistics and the availability check.
This is one of the most powerful features in SD. It's called ATP, Available to Promise.
And the logic here, backward scheduling, is really intuitive once you visualize it, but it's pretty clever.
It is. The system takes the customer's requested delivery date, let's say they want it on Friday the 20th, and it works backward.
Okay.
It subtracts transit time, let's say 2 days. So the truck must leave on the 18th. It subtracts loading time, 1 day. We must start loading on the 17th. Subtract picking time, 1 day. So the warehouse must start working on the 16th.
And then it checks on the 16th, is the stock available?
Exactly. The system checks inventory for that specific date. If the stock is there on the 16th, it confirms the 20th delivery date.
But what if the stock isn't available until the 18th?
Then backward scheduling fails. We can't meet the deadline. So the system instantly flips to forward scheduling.
It reverses the logic.
Yes. It says, okay, the stock is ready on the 18th. Add picking, add loading, add transit. You can have it on the 22nd. And it proposes that new date to the customer.
And all of that happens in a split second.
Instantly. It considers factory calendars, holidays, shift schedules. The logic is just incredible.
Okay, we've shipped it, priced it, and scheduled it. Now we need to get the money into the books. This is the link between sales and finance. Account determination.
The magic handshake.
Right.
Salespeople care about products and customers. Accountants care about general ledger accounts.
A salesperson sells a deluxe widget. An accountant sees domestic revenue. How does the system translate one to the other?
It uses a mapping table called VKOA. It's the Rosetta Stone of the system.
The Rosetta Stone. I like that.
You define the rules in this table. You say, if the sales org is 1,000 and the customer's account assignment group is domestic, and the account key is ERL for revenue, then post to GL account 400,000.
And if that mapping is missing, or if someone creates a new product and forgets to update the table?
The billing document won't post to accounting. You get an error. The money is essentially stuck in limbo. You can't close your books. It's one of the most common support tickets in any SAP project.
Speaking of projects, the source material doesn't just cover the software functions. It covers the reality of how you actually implement this stuff. The ASAP methodology.
Yeah, you don't just plug this in and turn it on. It's a massive undertaking. The ASAP roadmap is the standard life cycle. It starts with project prep and moves to the business blueprint.
And the blueprint seems to be where the real work happens. As is versus to be.
It is. You have to map out exactly how you do business now and how you will do it in SAP. This is where you find the GIPs.
The sources mention GIP analysis, so this is finding what the standard software can't do.
Exactly. No ERP fits 100% out of the box. Maybe your business has a really weird way of calculating commissions that standard SAP can't handle. That's a GAP.
So how do you fix a GAP?
You build custom code, Z reports, or user exits. The sources list things like third-party sales as a standard scenario, but even these often need tweaking.
Third-party sales like dropshipping, right?
Yes. We sell it, but a vendor ships it directly to the customer. The system automatically generates a purchase requisition for the vendor the moment the sales order is saved.
But getting the feedback from them must be the custom part.
Getting the vendor's shipping notification back into SLP to trigger the invoice to the customer,
Yeah.
yeah, that often requires custom interfaces.
Once you've built all this, you have to turn it on, the go live. The sources mentioned cutover strategy. That just sounds intense.
It's the most stressful part of the project, hands down. You have to shut down the old system. You have to move millions of records, customer data, open orders, stock balances into the new one.
And you usually have a very short window to do this, a weekend.
Usually a weekend. You shut down on Friday, migrate everything, check it, and just hope that when you open for business on Monday, the system works.
Wow.
If the inventory data is wrong, you can't ship. If the customer data is wrong, you can't mail.
One last advanced concept that really stood out was rebates. Not simple discounts, but retrospective ones.
Right? Buy 10,000 units this year, and I'll give you 2% back at the end of the year.
The problem is, you don't know if they will actually hit 10,000 units until December, so the system has to, gamble?
Gamble, prepare.
It tracks accruals. Every single time you buy a unit in March, the system secretly sets aside that 2% in a background accounting document. It's saving up for that future payout.
It was like a piggy bank.
Exactly. If you don't track it, you take a massive, unexpected hit to your profit at the end of the year. If they miss the target, you just release that money back into your own profit.
That is a lot of moving parts. We've covered org structure, partners, order flow, pricing, logistics, finance. How to build it, it really is a nervous system.
It's about control. At the end of the day, SAP SD isn't just about selling. It's about integrating the customer's desire with the warehouse's reality and the accountant's ledger. It forces a company to be disciplined.
You can't just ship a box anymore.
No. You have to define the shipping point, the payer, the Incoterms, the GL account. It connects the dots that most of us don't even see when we click buy. But what stands out to me is how predictive it's becoming. With things like forward scheduling, the system is already calculating the future based on current constraints.
And that leads to a really fascinating provocation, I think. If the system is this good at knowing what we buy, when we buy it, and how long it takes to get to us.
Are we moving toward a world where the software doesn't wait for the buy now button?
Exactly. Predictive fulfillment. If SAP knows your consumption patterns, which it does, and it knows the lead times, eventually the system might just ship the goods before you even realize you're running low.
The sales order becomes a confirmation of a prediction, not a request. That is both incredibly convenient and slightly terrifying. The system knowing what I need before I do.
That is the ultimate destination of supply chain logic. Perfect synchronization.
Well, until the software starts ordering my dinner for me, I think we'll leave it there. This has been a deep dive into the brain of global commerce, SAP SD. Thanks for unpacking it with us.
My pleasure.
See you in the next deep dive.